country. So treatments are getting much better. Obviously, the vaccine was a huge catalyst for the Goldman call because no one could have anticipated 90% efficacy. So that's coming down the pike. We have Moderna coming soon and a lot of good things happening. So I'm going to side with Goldman. The premise here is that the consensus earnings estimates are too low at 168 for the S&P 500. He has them at 175. And the thing that I'm keeping my eye on, not today, but as a trend, is the 10-year yield, because that steepening is going to add earnings power to banks, and that's going to add a lot of earnings power to the S&P 500 next year, number one. And number two, the four money center banks are over-reserved by about $25 billion. They made those assumptions when people were looking at 20% unemployment. We're now at 6.9% unemployment. So that's all going to come back as earnings power in 21 and 2022. So a lot of positive things to look forward to, Liz. And as far as the greatest trade with Bill Ackman putting on that hedge for his equity portfolio, it's very uncommon to have two greatest trades in 1 year. As we saw with the Big Short, it was very hard to replicate that performance moving forward, but you only have to do it right once.
Yeah, that's right. That is true. Phil, you see that 2-week chart of the 10-year yield? And guys, we don't want to get too wonky here, but when the yield starts to spike, and we're at what, 0.96, that's a 13 basis point jump over just 1 week, which means there is not a lot of fear in this market. You could look at the VIX, 13-point drop since last week, 7 trading days ago. Which side do you take here, Phil, and what's your trade?
I go with the Goldman, right? You want to go for the gold, right? And even Bill Ackman, I don't think he totally believes in this trade either. That last trade really bailed him out. His fund was actually down 7%. This was the one trade that he bet on. He bet big on the corporations being hurt by the defaults, and he won on that bet. But even on this bet, he seems half-hearted with it. He goes, this time we're not going all in. We're going in about 30%. And basically, I hope I'm wrong, because what that tells me is that he's doing this as kind of a hedge. Yeah, he's doing this more of a hedge, and that he kind of believes that the market's going to go up, but this is a just-in-case scenario. Now, the worst thing for him, obviously, is this vaccine, because the odds of the vaccine, low interest rates, which we have been seeing, right, that's going to be an interesting thing. But you look at those bond yields, surprisingly, you look at the 30-year bonds, they're making the lows on the futures, the high on the yield, the 10-year yields have been falling. I think that could turn a little bit. I think it's a little bit overdone, but I think, the way I'd play it, I think I'd want to be, the short end of the curve, if we get this vaccine, I think could, gain on the longer end of the curve.
Okay, but so is that your trade? Are you shorting? Do you look at anything that's just horrible right now, Tom, that you would say, forget it? This is not going to be a good play?
Well, I'll tell you what I do like, Liz. I like Fox Corporation, believe it or not. Over 80 million subs. You get a piece of the Claman countdown. They've authorized over $2 billion of buybacks. They bought $500 million of shares back at $35. You could go into the market right now and buy it at a discount to the company. And I think the trends are very positive coming out of this new business cycle.
Sold. I'm sold on that. All right. Thank you very much, guys. Good to see you, Tom, Phil. We appreciate it. All right.